All right, all right. Good morning, ladies and gentlemen. Welcome back to another ShareWise webinar. Today, we're joined by Timothy Wither, the Managing Director of Maximus Resources, which is MXR on the ASX. I'm very, very excited to hear what he's got to say. From my end and ShareWise and Tim, we want to thank you for your time. I know you're a busy man, and it's not easy always trying to find a little bit of time to do one of these. So, just want to thank you. I won't sort of take the stage. I'll let you introduce MXR and what you want to discuss today. But my name's Harry McCaskill, and this webinar will be recorded to everyone listening or someone who people who haven't had the chance to watch. It's going to be on our YouTube channel. I'm sure Tim will put it out there on his socials as well, for everyone to sort of watch back as well. Now, how to work? Do a little bit of a presentation. I'll try and make it as interactive as possible. If people are putting in questions, I've got some questions of my own as well. And then at the end, we'll also have a separate sort of, maybe 5-10 minutes for Q&A after that presentation. But Tim, pleasure. I'll let you sort of take it away.
I'll just share my screen.
Yeah, beautiful. Yeah, we got you.
Morning, everyone, and thank you for joining us today. Special welcome to Maximus Resources shareholders here on site. The birds have just started to have a bit of a chirp with us at the moment. And also thanks to ShareWise for the invitation to present, privileged to present our story for the first time to the ShareWise audience and share the opportunities we're pursuing as a company. For those who are new to our story, Maximus Resources is a small dynamic exploration company on the pathway of becoming a multi-project gold producer in the heart of Western Australia's Eastern Goldfields, and we're 25 kilometres from Kambalda. So over the next 10 minutes, I'll walk through who we are and where we're heading, and how we're going to be turning our opportunities into tangible outcomes for investors. And I like starting with this image of our Wattle Dam gold mine, which is the heart of Maximus's story, its legacy, and it's also our future potential. So mined over a very short period of time until 2012, Wattle Dam produced over 270,000 ounces of gold at 15 grams per tonne, making it one of Australia's highest grade gold mines at the time. And in today's gold market, produced over $900 million worth of gold. And it's a great example for the reason why we're all here today, because of the enormous wealth that can be created when we make one of these discoveries. So Maximus Resources offers a compelling investment proposition. Firstly, we've demonstrated strong resource growth in just 2 years. We've increased our gold resources by 300%, taking our total to over 335,000 ounces. And this growth has been driven by disciplined, systematic exploration, with over 82% of our funds invested directly into the ground. Secondly, we're strategically located. Our granted mining tenements sit in the heart of Western Australia's Eastern Goldfields, surrounded by 9 gold processing plants within an 80-kilometre radius. And this proximity to infrastructure not only reduces costs, but accelerates our pathway into production. And thirdly, we're diversified. While gold remains our core focus, our lithium partner with the South Korean government adds another dimension to our portfolio. And lithium is critical for the global energy transition, and we're positioned in one of the most prospective regions for hard rock lithium. And finally, we believe that we're undervalued. Enterprise value of under $43 per ounce. Maximus trades well below industry standards, offering significant upside potential to investors as we achieve our milestones. So our pathway to production is designed to be efficient and scalable. Our toll milling strategy provides production is straightforward and managing our risks while maximising a return. By targeting shallow, high-grade open pit resources, we minimise upfront capital requirements and reduces our operational risks. This approach enables us to generate early cash flow that can be reinvested into future exploration and development. And we've already made some significant progress with development studies well advanced across several projects, with environmental and permitting in progress. We're in advanced discussion with toll milling partners, allowing us to process ore without the need for expensive infrastructure investment. And starting small scale operations means we can expand incrementally, scaling our projects sustainably over time. And with this phased approach aligns with our core philosophy: start small, prove the model, and grow into a robust multi-project operation, ensuring that we can adapt to market conditions while steadily building value for shareholders. And our Spargoville project spans 17 square kilometres and is located in the prolific Widjimutha Kambalda region, which has produced over 15 million ounces of gold and 1.4 million tonnes of nickel metal. This makes Spargoville one of the most prospective regions in the world for mineral exploration. At Spargoville, our primary focus is on the Wattle Dam Gold Project. The mine remains central to our strategy, offering established mine infrastructure, proven high-grade mineralisation with significant exploration upside. And beyond Wattle Dam, the broader Spargoville tenement area is full of opportunities. We've identified numerous walk-up drill targets, large mineralised trends, and means there's significant room for growth. And our challenge is not lack of targets, it's prioritising the targets. And for investors, the company's assets represents the perfect balance between near-term production potential and long-term exploration upside. And with our advanced geological modelling and targeting drilling, we're confident in our ability to expand this base beyond 500,000 ounces. So our gold resources are strategically distributed across 4 key projects, each offering unique opportunities. Wattle Dam, with 251,000 ounces, is our largest resource. It is supported by existing infrastructure and offers high-grade, shallow mineralisation that's cost-effective to mine, such as the 8500 North Paleo Channel, which we've just finished the first stage infill drilling, with results expected soon. Eagle's Nest features shallow, high-grade mineralisation starting at surface with further strike potential. And this project is quite interesting. This is the discovery site of Western Australia's largest gold nugget, the Golden Eagle of 35 kilograms. Hilditch is our most advanced project in terms of permitting, making it a priority for near-term development, and is only 1 kilometre from the National Highway. And Larkinville, this holds 14,000 at 1.8 grams. All required studies have been completed, and we're in the final stages of securing access agreements. So collectively, these resources form the backbone of our growth strategy. And this image puts into perspective the opportunity for Maximus. 2 kilometres to the east of us is Astral's Mandilla project, 1.25 million ounces, and it's showing a very similar strike to our Wattle Dam Gold Project. And this is a long section through the Wattle Dam Gold Projects, and you can clearly see the repetition of the high-grade shoots, and you can also see the mineral resources is only limited by drilling, and all resources are open at depth. So the 8500 North at Wattle Dam is one of the more exciting exploration targets recently. And paleo channels are ancient riverbeds which often host gold-rich gravels. And what's particularly appealing for paleo channels are that they are free digging, meaning there is no drill and blast required, and this translates to significantly lower production costs. Recently, drilling has confirmed the shallow, high-grade mineralisation within the paleo channel, and that's only the beginning, with modelling suggesting significant opportunities present a long strike and also a mineralised saprolite zone that's been unknown, which sits directly below the paleo channel. Another key focus for the company is the structural offset for the Wattle Dam main lode. As mentioned, it was one of Australia's highest grade gold mines, underground 15 grams. Historically, exploration has been concentrated on the eastern side of the shear zone, and we've been recently shifting our attention to the western side of this shear zone, and early drilling has resulted in it being very promising, revealing that the geology has been identical to that of the main lode, with grades up to 8 grams per tonne. And if this theory holds true, it could unlock a new zone, high-grade zone comparable to Wattle Dam's historical production. And this is a big opportunity that we are pursuing at the same meticulous approach that has driven our success to date. And while gold is our core focus, our lithium projects are an exciting addition to our portfolios. And we have 2 advanced assets in WA's Eastern Goldfields corridor, Lefroy and Larkinville. And this slide puts into perspective of where we sit within the mineral resources, and we sit 16 kilometres from Mount Marion Lithium Project. So at Lefroy, our partnership with KOMIR and LG Energy Solutions has secured $3 million in funding, and drilling has already intersected spodumene-bearing pegmatites, confirming the fertility of the system. With over 80 outcropping pegmatites, Lefroy has the potential of becoming a significant lithium discovery. Our second project, Larkinville, is equally promising, with 1 kilometre of lithium in soil anomalies. That's even more substantial than the anomaly that led us to the Lefroy discovery and recently the Bird Rock prospect. Exploration is ongoing and the results so far have been encouraging. So from a corporate perspective, Maximus Resources offers exceptional value with a market cap of just under $17 million and an enterprise value of $43 per ounce per gold. And this is well, as mentioned before, this is well below industry averages, reflecting significant opportunity for investors as we deliver on our milestones. Our shareholder base is robust, with the top 20 accounting for 55% of the register. And this includes strategic investors like Beacon and Mr. Colin Petrolis, who share our long-term vision. So to wrap up, Maximus Resources is a company with a clear pathway into production, a portfolio of high potential assets. Our gold projects are strategically located in close proximity to infrastructure, reducing costs and accelerate our pathway into production. And we have a track record of resource growth. We also have a fantastic strategic partnership with KOMIR, providing non-dilutive funding and expertise for lithium exploration, which is delivering results. So thank you very much for your time today. We're excited about the future and confident in our ability to deliver. We encourage you to stay connected and follow our updates and reach out to us directly through our website with our website address shown at the bottom of our screen there.
Lovely, lovely. We've had a few questions come in, which is really, really good. Yeah, you've just stopped sharing. I was about to do that. Perfect. The first one, and I sort of had something similar. You mentioned obviously you're near-term production, right? What is the realistic time frame to reach that production within the business?
So the time frame is really dependent on the toll milling partners and the availability through the mill. Obviously, a plant as such the size of the rounds 1.2 to 1.8 million tonne per annum plants, they need to have a very long foresight of where they are going through it. So it's where we fit into their program. So we're in discussions with a few groups and keeping our options open.
Yeah, that makes sense. And obviously, you're still in talks with the toll milling and mining situation there. How does that contribute to the overall success of the business objectives moving forward? And how important is that?
Like simplistically, undertaking toll milling fast tracks Maximus to be self-funding future resource growth, and it makes Maximus a bit different to other toll milling companies, as we've got a sequence of shallow open pits which we'll be able to fund the company into the future. And priority for us is getting these projects shovel ready. Yeah,
okay, that makes yes, right. And then I guess when it comes to the recent announcement with the resource drilling program at the Hilditch Gold Deposit, can you sort of elaborate a little bit more on that and the project moving forward and any sort of key milestones that are happening there?
Yeah, so as mentioned, Hilditch is one of our most advanced projects, and the recent results that we released is the final stages prior to our MRE update. Primarily, this was to improve our resource confidence with the objective to move some of the resource into the measured prior to completing pit optimizations. And we're really pleased that we've been able to expand on a high-grade zone within the optimized pit shell. So that greatly improves the economics of Hilditch.
And in comparison to that project to the others within the firm, within the business, Is that the largest? Is that the most important? Or are they all just as important as the other? Is there one key focus at the moment?
They're all as important. Each one has its uniqueness and challenges and opportunities. Hilditch is the one that has the most of the boxes ticked, and submission of mining proposals have been progressing. As I mentioned, Hilditch will be our priority, which then will lead into Larkinville, which is 8 kilometres to the south of me, and then moving back here to the Paleo Channel, which just sits 200 metres behind me, and then moving into Eagle's Nest. So there's a sequence of pit operations, and it's all just targeting shallow gold mineralisation. Hilditch sits around 1.3, Larkinville sits around the optimisation, which is sitting around 2 grams, and then moving back to the Paleo Channel, which opens up a completely different set of economics.
Yeah, right. And I guess moving on from certain projects, right? The whole underlying, asset, which is gold, right, and the commodity gold. We've seen it have such a big run up in the last year. Let's say since October last year, it's done extremely, extremely well. If gold was to have a pullback, how does Maximus and yourself sort of make sure you guys aren't in a position that you need to do capital raises or you're falling behind the 8 ball?
Well, when we first started optimizations for these operations, gold was sitting at 2,300 Australian. When I started in this industry, it was $275 an ounce. So there's going to be moments where the gold price is having its natural breathing in and out, but there is underlying value for these projects. If everything was to go backwards with gold price, the assets were able to maintain our expenditure requirements through our lithium partnership. And if everything is, if everything's in the toilet, then we sort of bunker down. But I have pretty strong, and we all have pretty strong conviction of where gold's heading. And so our focus is getting all these projects shovel ready. And then with these projects being shovel ready, opportunities will present itself.
Yeah, I guess you got to create your own luck, right? And patience is also another thing. What is your outlook on gold? Obviously, you're in the industry, you're around it every day. Where do you see the price getting to?
I think it will remain where it is. And like I mentioned, it's 40% up over the last 6 months. I don't have too many fears that it's going to be retreating in a hurry. Like I mentioned, our challenge is getting these projects shovel ready. The starting production, the challenge is starting, and once you're moving in a direction, it's easier to maintain momentum. And we learn from one project and take it into the next and get better and better as we go along.
And I guess with these projects getting them shovel ready, how's the capital looking? Investors are always worried about potential capital raises or how they're going to pay for certain things within the business. How is that looking, on the books? And is there any need to sort of get grants or government funding or, do capital raising in 2025?
We're a very small team. As mentioned, 82% of our over the course of the last 3 years have gone directly into the ground. If capital was to be tight, we would pull back on drilling, which is the most expensive activity that we do, and focus directly onto our production, which will enable us to be self-funding. In terms of capital raises, we do entitlement offers. We did one in April, and the last capital raise we did was in August 2021. So we've clearly demonstrated we're responsible with our capital allocation. And going forward, I can't see that changing. So we make sure shareholders' money gets placed in the right spot.
Of course, and I guess that's what they want to hear, right? And that sort of leads on my next question. How do you, as a managing director in the company, how do you plan to create that long-term shareholder value? What are the key value drivers besides obviously the price of gold going up or the price of lithium going up? How do you continue to stay on track to get these things to production?
Yeah, creating real value for investors is starting production. So as mentioned, the challenge is starting, and then once moving in a direction, it's easier to maintain that momentum. And we have a clear sequence of pits and opportunities to be able to add real value to the company. But we strongly believe that we have the ability to maintain both the toll milling strategy in parallel with our ongoing resource growth and testing several pretty exciting exploration targets. And as mentioned, we run on the similar of an oily rag, so intent is to try and keep this same level of activity.
Yeah, I agree. We've just had a quick question come through from Ibrahim. Is it possible for us to know ahead of the quarterly report how much capital does MXR currently have? I think I can answer that. The answer would be no there.
So we finished last quarter with 3.12, I think it was. And yeah, all intended purposes will be finishing the same sort of same expenditure running through this quarter.
Yeah, excellent. Now, one thing I like to ask everyone I sort of have a webinar with, every CEO or managing director, just to part ways is for those who are new to MXR, don't know much about it, maybe new shareholders or even current shareholders. If there was one thing you would like people out there to know about MXR and even yourself, what would that be, and why would it be a good investment?
There isn't one MD on the ASX that says that company isn't undervalued. But if you look at the fundamentals, do the maths, $43 per ounce, we're extremely undervalued compared to industry peers. Have a look on the map. We're in a fantastic location. These are granted mining tenements. They don't grow on trees every day of the week. In Western Australia, this is becoming more and more important. 2 kilometres to the east of me here, we've got the National Highway, 25 k's from Kambalda. Fantastic location, very underexplored area, and we're finding opportunities through this area. So we've got 30 kilometres of strike. There's a significant amount of upside, and I truly believe that once we get into toll milling, we'll be able to self-fund and accelerate this project a lot faster.
Beautiful, Tim. Well, I'm excited to see the growth, and the share price in the last couple of months has done really well for MXR. So hopefully the trend continues. But again, thank you for your time. And this has been another ShareWise webinar. Like I said, it is recorded. So anyone who's sort of missed out or jumped in late or whatever it might be, you'll be able to watch that. Tim will get a copy. He'll put that where he needs to put that, maybe on their website, I'm not sure. But my name's Harry McCaskill. Thanks for watching. And everyone have a lovely, lovely afternoon.
Thanks, Harry.
Yeah, bye.